What is going on, everybody? Man, just looking at this market. Who woke up today, looked at the market, and said, I think this thing is going down, and looked at it for the last 30 minutes? All of a sudden, I'm looking at this. Holy crap. We just got this massive press to the upside. So hopefully, you guys are long. All I can say is this week we have a huge week. So get this link out if you guys can. Send it. I'm gonna give everybody just a couple minutes. Thinking around here on the charts. But yeah, we had a huge technical breakout last week on earnings results, way better than most people were thinking. And man, this thing, it's a big week for sure in terms of like we got the Fed, we got more earnings coming. We got some companies just dumping it, but so many out there way better than expected. And geez, this setup is wild. Definitely wild. So there's there's gonna be some fireworks this week, that's for sure. All right, give them just a minute. I'm gonna post this. Let me see here. Getting you ready. You know what? I'm gonna go ahead and hop in. Let's go ahead and do this. I'm gonna share this. Hopefully, this is gonna work out. If you guys have questions, or I'm gonna minimize this chat, or if you want to take a look at some charts while we're here, just throw them in the chat. I'll bring them up. I definitely have a bunch to look at. So what I would say is, in terms of what I'm looking for right now, is things that are not going to have major earnings volatility in the way for this week's contracts. There are definitely some setups that look very bullish moving for the week, though. Let's see. And I think, give everybody a couple more minutes. Let me send this out. I think, you know what? Let's go ahead and roll. I got somebody coming in. Jesse might be joining us. He's literally said he's in the sauna. But that's cool. We'll give him just a minute. Let's see. So moving forward, right along here, let's go ahead and hop into the slides. If you're new to this, welcome. If you're viewing this later on, most likely than not, that's the case. That's totally cool too. Every Monday, I go through and kind of look at what is coming up on the calendar. What do we have to look forward to in terms of earnings? What are some of the new, like the major headlines that hit last week that we need to pay attention to? Cool. So a couple things. So some solar stuff, very funky. I don't know if you guys are familiar, like California. I guess they're stopping how much energy you can sell back to the grid, or like they're pausing it. So it's Enphase got completely destroyed. It's been a major darling for a lot of people. But this shift, I started thinking, like if the market does get a little bit more defensive, we definitely want to look at utilities. And PG&E is one utility that has a pretty major fundamental change going on. They have new leadership. They just got brought into the S&P 500 not too long ago. And the chart is definitely in a bullish trend right now, but it's a slow mover. It's not an options trader for me typically. Maybe there'll be some opportunities later on. But if energy companies are not spending so much on buying back, energy from consumers to put into the grid, that's actually going to be better for their costs. So, some different type of perspective. So maybe short Enphase, long your energy companies like NEE or Duke. FRC has been the big headline really for like the last 2 weeks. That thing got halted like 10 times last week. They lost about $100 billion in deposits. And over the weekend, JP Morgan, Jamie Dimon came to the rescue and saved it. And then Thursday, we got a huge technical press. Oh, sorry, guys. We get a big mark where, it's like 414. So right now, technically, we should be looking at new highs for the year, believe it or not, in May. I know they say sell in May and go away, but that doesn't mean like this month is bad. It actually is the opposite. So this month, we're off to the races, it looks like. Assuming, I don't even think FOMC comes in Friday, so we actually get a rate hike on Friday. And currently the market's pricing in 25 basis point hike now, pause, and then starting to cut in Q4. So we'll see how that goes. We can look at the Fed funds forecast later on. There's still a ton of, you have to look a little bit more. Like Nvidia is flying, right? I'm not even looking at the chart. I just know like it triggered long again on Friday, and I checked it today, and things going off the hook. Google had an amazing earnings report. They're really not the best showers on their earnings reports. They just don't have a whole lot of, I don't know what it is. They're just not super enthusiastic. But following through today, I think we got a couple big ones coming up, early in the week. And then we have Apple that may, NVIDIA running from AI only. This is a good question. NVIDIA, is it running from AI? Not necessarily. I think what I could say about NVIDIA is that they have ridden every like massive headline since, inception. And they're really good at that, right? Like, yes, they are, predominant, really, like, I believe like the only major players in AI. AMD, by the way, reports in the next day or two, and it has none of that reported or baked into it right now. And what I could say is, if you look at the AMD chart on the daily, time frame, that thing looks like it's prime for a reversal. So if Lisa Su comes out and says anything AI, which I'm positive she will, AMD should probably start ripping to the upside. So, if you're not invested in that, contracts super expensive this morning. But I bought a little bit today around like just under 89. And if they really follow through tomorrow, I might buy a little bit more, or after they report, I might buy a little bit more. Or if they dump, I only bought a little so that I can dollar cost average in also after the fact. So we'll see. I think the one to watch for sure this week, no question, is going to be Apple. But Apple's going to be a big one. That could definitely have some wake that runs through the rest of the market. There's one other thing in NVIDIA that I don't think is really priced in, and that's their cloud. So they've been talking about this NVIDIA cloud product for forever. I really don't know much about it, but I will say is, if NVIDIA does have an actual cloud platform that they start selling direct, or even through like AWS or what have you, that is a big deal. That I mean, that could probably press that chart to like new highs. I hate to say it. And if you're wondering what's going on in the market, it's so funky, right? So we have companies that are going under, right? Like, so FRB is in receivership right now. They're done. I think that's like the fourth or fifth big one to go. There may be more, but what's true right now is that the contagion factor isn't really that big of a deal, right? So we're seeing a lot of companies beat. We see a lot of companies with very low expectations, and we are seeing a few misses, but it's not. I think more downside is priced in at the moment than upside. That's what I'm seeing. There's a sector, home builders, that have just been absolutely on fire for like the last month and a half. I'm looking at these numbers and it's like, wow, construction spending, even though home sales are not up, but spending on construction is, and it's like new highs for sure. So there's a lot of good stuff out in the market. And there's definitely some sectors I still want to be very far away from. So we're going to hear about CREs or commercial real estate, stuff like that. If you go back in some of these videos, what it's about, it's going to be about, anybody that bought anything on adjustable loans, adjustable rates, what they paid. Let's say you bought an apartment complex or even a house, when interest rates were super low. Houses prices were actually pretty high then. If some of that comes down, but your rate is adjustable, well, then you have you're upside down basically, and we call it debt deflation, where what you owe in assets, like what you owe in your debt, is going up, right? As rates are continuing to climb or start to climb, and what you purchased, or your assets rather, start to go down. So that puts you in an upside down type of situation. That's what the fear is right now. I think where you really see some of that is still in like that commercial real estate stuff. But the question is now is like, is all of that already priced in? And we don't really know. So there's a handful of companies in that sector that are very beaten down. and have not even started to kind of recover. Uh, you know, the question is all of it already priced in? I don't know. But a lot of it is for sure. So just getting into some of the actual numbers here. So home prices, did go down. So year over year, 0.4%, prior 2.6. So basically it went down. This is the February number, but it's still slightly positive, I guess. Durable goods, this is consumer spending stuff like washing machines, things like that. So still some spending, at least on the important stuff. Home sales, here we go. Home sales year over year, down 23%. So the sales are starting to fall. But what's weird is like construction is still going up. So construction spending is climbing, home sales kind of slowing down. We'll see how that kind of plays out. The other piece, so personal income here. So spending was flat. So, the consensus on the street was that we start to spend a little bit less. What's good is that spending was flat, so we didn't spend more, and the income came up just a little bit. So we're starting to offset some of that inflation stuff. And then the next thing is, well, here it is, employment costs. So if employment costs go up, spending's low, you know, we should be able to push to the ups. I really think that SPY is going to have this huge breakout pretty soon. Um, and then we'll have to see where we go from there. But we'll play this out and we'll measure it out. PCE was the big number of the week, so that's the Fed's main gauge, really. So consumer consumption expenditures. Sorry, consumption expenditures. So in simplest terms, if you look at how much are we actually spending, that's like your supply, right? And like, where's the or your demand rather in your economic, supply demand thing. So if PCE is going up, then demand is going up, and that keeps inflation high, right? So we actually want to see that number start to cool down. So the PC price index year over year is starting to cool down, but it's not cooling down nearly as fast as we need it to. What's up, Jesse? I'm going to pull you in. Is it cool? Give me a thumbs up or something. Jesse's waiting in the lobby. There he is. What's going on, man?
Hey, nothing much.
Hanging in there?
Oh yeah, I just got back from the gym.
Right on. Jesse told me he was in the sauna this morning.
Yeah, I love the sauna.
Nice. All right, I'm just gonna back to this really quick.
Yeah.
So let's see. So recap. So this is where we were earnings. I'm gonna do a quick earnings. So far of the Dow 30, we've had a ton of components actually report. Let me pull us down just a little bit. What's funny is that if we're expecting this earnings kind of recession, right, you'd expect to see a whole hell of a lot more companies start missing, right? Last quarter, we had 17 beats, 11 misses. Admittedly, that was probably one of the worst quarters I've seen in terms of like where we're keeping our records. Oops, I must have missed this just a little bit. So this is 1, 2, 3, 4, 5. So 5 misses so far. Everybody else is beat. And the misses are really, like, I was looking at the Altria chart the other day, MO, and man, that chart looked like, and I haven't looked at it today, but that chart looked like it was about to break out. So what I'd say, if you're an investor and you're looking around in this market, this is about the time that you actually want to start looking for companies that missed on earnings but have good price action. Let me just pull this up. MO. Yeah. And this is a perfect example. Wonder if you guys can see this. So here's a weekly chart of Ultra, and I would start here. It's very hard to be bearish on a chart like this that looks like, well, it's actually looking really good. If this thing goes up anymore, like 48 over $48, like if it closes at $49 this week or starts to trade for a few days over that price, you're looking at something that's like, wow, okay, we should at least be going 53, and then beyond that you could be looking seriously higher. So there are a lot of charts that are in this perfect kind of like, let's say, bearish to bullish reversal after massive amounts of consolidation. This is the daily chart. I mean, this looks pretty bullish to me, actually. So it's funny to be in this weird kind of scenario in the market where it's like, okay, there's so much bad news out there, but at the same time, I look at some of these charts and you're like, holy crap, right? This is a massive, like, this is a miss on earnings, but good price action, right? That is the like typical sign for me of a market bottom. or at least a bottom in a stock. This is how we found GE. This is how we found a handful of others too. So, anyways, I just wanted to point that out. That's definitely something you guys want to be looking at when you're going through charts after post earnings on this setup. So again, J&J, by the way, they're doing a spinoff of one of their healthcare units, and I think that's going to be more and more common. Where like, there's not so many IPOs, but you are seeing spinoffs. So one of the major catalysts for GE was that splitting into 3 companies, they've spun off their healthcare division, which by the way is up like 50% since they spun it off, and then they're gonna spin off the aviation piece of the company also, which would leave them with 3 components. So energy, aviation, and healthcare, which are, right now all doing really good. But the sum of the parts being greater than the sum of the whole, that's what we're looking at. So a stock like J&J, who's been depressed for so long, being able to spin off some pieces that maybe the market's looking at it in terms of it's been weighing it down for a while. This is exactly what was happening with GE. The healthcare department was weighing down the stock for so long. Once they were able to cut off that fat, it was able to do its own thing and kind of grow on its own, but it didn't. GE, the stock didn't have that piece weighing it down anymore. So let's get into this. Yeah, SPY huge breakout. What will come? I'm going to read some of this. Jack is busy today. What will come about with the banks when we get another rate hike? So I don't think anything major is going to come with the banks. What I'd say is, 25 basis points is really not a lot in terms of that for banks themselves. What we're seeing definitively right now is that, look, Jamie comes in over the weekend and buys up FRC, right? Like, I think I was listening to something that was like, JP Morgan has about 10% of the nation's deposits now. Like, that's wild. That's a big number. So JP Morgan is getting bigger. Will there be more like banks go into receiverships? Very likely, probably. But at the same time, if I look at something like the KRE, right, which is the regional bank index, and this is the blast zone, right? KRE regional bank index right now. This is so like just a slow grind to the downside. I don't think that this thing completely falls off. It probably ends up right back into this kind of chop zone, which is where it was for a really long time before. So, so for right now, it probably chops to the downside. This being an index, I don't think you have a huge, like the index isn't going to fall off 50%. Typically, you're not going to have 50% of those regional banks just like completely dump out. You will probably have some other ones that do, but not 50%. No, it's not happening. So like a Zions or what have you. And at the same time, if you're trying to pick bottoms in anything that you might think is undervalued in this sector, I would say probably not time for that, because until this can actually start trending to the upside, anything in there like a WAMU or what have you is going to be pretty depressed for sure. So just saying that's my 2 cents until the sector or the group has kind of flushed out everything that's keeping them down right now. Okay, cool. Huge breakout back up. Yeah, SPY huge breakout up. Yes, back up. The uptrend we've all drawn. Yep. Oh, that's way broken, the uptrend. All right, let's get back down to this. I'm gonna come back to that comment in a second once we get through some of this earnings stuff. So it's a big earnings week. That's what I'd say. So SoFi kicked us off. I think we had a lot of comments on SoFi potentially having like these massive, up 45% or something like that in deposits. Looking at this after hours, I had my limit order to close at 7. I got some bullish commentary by a couple of buddies, so I took it off. I'm looking. It would not have even triggered anyways. I would have missed it by a couple cents. 696. But I ended up selling the rest just with everybody else this morning when it was absolutely not holding this at all. So yeah, they did beat. They did. I pulled some metrics this morning. It looked good from a price perspective, but I don't think it's just right back to where it was. But it's definitely not breaking out right now. That's for sure. Let's see. So I didn't check on semiconductor. ON. Yeah. On semiconductor looking good. Checkpoint. That's security, right? Ticker. Check. That's like a Fortinet. So I might look at that because Fortinet does report later on this week. CNA, WC, Franklin Templeton. Yeah, I'm not seeing anything major. Do you have anything that you're looking forward to this week, Jesse, in terms of earnings?
No, I mean, oh no, not earnings. No,
Yeah.
I've honestly been a little out of the loop with earnings. Just focused really on Dixie and Wednesday news.
Yeah. So big news all week. So we got Wednesday FOMC, I think, and then Friday NFP. I'm just
Yeah.
gonna hit this earnings stuff real quick. So Pfizer, I have some Pfizer contracts, by the way, are still like crazy low, crazy cheap. I have should I say on it? Yeah, there's not a lot. We'll see. I have 616 expiration, $40 calls. I got these at like $60 the other day. What I'd say is that they're $40 calls. Earnings are tomorrow morning before the open. I own the stock and I like the div. I think it's crazy undervalued. You guys have seen me talk about this a million times, but I like, in this case, I'm going to continue to hold some Pfizer calls as an actual option to possibly buy more shares in the event that it does break out. I don't want to extend myself more before the earnings, and I don't want to sell puts ahead of the earnings either, because if they do fall off a cliff, like, I don't want to be in front of that. So in this instance, and it's a very, very, very rare instance, but I'm just giving you guys an example. This is what that instance looks like, using options as an actual vehicle to potentially get long the stock, over an event, something like this, where you can find an edge where they're very underpriced. They are very underpriced right now. And if there is a breakout move, I didn't have to risk a ton of equity. I'm not selling puts if it does fall off, right? I don't want to get stuck in that negative gamma kind of situation where I can lose more than I put up. And in this case, if I bought them for like $60, strike price is 40, that would put my cost per share at like $40.60. In a breakout situation for Pfizer, this thing is not going to be near $40.60. It's going to be significantly higher. So I like this risk reward for in this instance. It's very, very instance, but just saying. AMD is going to be a big one. I think tomorrow after the close, AMD, again, looking at that chart, there is no good news priced in at AMD right now. This is a breakout. This is a classic reversal pattern, right? If you're not familiar, this is what we're looking at. We're like looking up 2 up of the week, right? So big hammer down here, actually right on like a price of like an order block right here. You got all the major moving averages. This is actually a 20-week. I'm sure this will be a 20-week if I open this. There's a 50-day, 20 weeks down here. 20-day. Yeah, so all these moving averages are getting real tight and squeezy right in the same spot. So this is a setup where you really could see technically a breakout start to form. But again, we have this earnings event on a daily time frame. This looks like it's at least a pre-earnings run up, no question. It's already going down. I bought a little bit this morning. I'm not just seen as I'm not a big like AMD shareholder guy,
Yeah.
but there's this thing where like when a stock is like breaks over 75, they tend to rip right through 100 pretty quickly.
Yeah.
Speaking of, like I was looking at my GE position this morning. I'm like, hello, right? Like like holding over 100 again. I'm like, this thing, what a breakout, right? Like it's still breaking out. It's still going up. I don't understand. It's fine. My targets are higher. I thought it would consolidate a little bit more. No dice. not happening for me right now. We got Starbucks after the close tomorrow, and I think the big ones. I'm going to tell you guys right now. Datadog is Thursday before the open. I'm going to put a straddle on Snow on Wednesday at the close. So that's buying a put and a call for Snowflake as a pairs trade against Datadog. Whatever happens to Datadog, I personally, I feel like it'll go down, but how I feel doesn't really matter. I'd rather put the edge on. There's not a ton of IV built onto the Snowflake contracts. So that said, Datadog's going to move. Datadog will move Snowflake with it. I'm going to take a pairs trade. take that movement on Snowflake regardless. Moderna's been dumping. That CEO has just been nonstop selling shares every day. It's like $6 million. And we got a handful. So Thursday's the big one. There's this, I'll show you guys this. On FinViz, if I looked at Apple, and we had some people talking about this last week, and I was like, ooh. So Apple, here it is. What just happened? So Apple, get out of here. I hate when these ads pop up. CFO sharing, selling 70,000 shares. She's 100,000 left. Between like the last couple, these two sales, that was actually 40% of her shares. So I'm looking when your CFO is selling 40% of her shares before an earnings release, like that's kind of sketch to me. This is about a fifth. This COO sold about a fifth. Tim Cook barely sold. I mean, 56,000 shares. He still has 3.3 million left over. It's not a ton. And this person, SVP, I don't know. This SVP sold what? 72,000 shares, which leaves her with 425,000. So that's about a fifth also. I mean, these are big sales ahead of this report. It's a little suspicious for sure, but we'll see. You have no idea. All right, that's for the most part. And I do have, let's see, I also have, I think Square has that short seller report. I'm gonna lean short on Square. Uber, where was Uber? Uber's tomorrow morning. So Uber may move Lyft as a pairs trade too. And then Warner Brothers Friday before the open. I have equity position there. I think that's most of the stuff I really wanted to get into for earnings, but there's a ton coming up, right? Overall, here's the week, right? Jesse mentioned Wednesday. That's the biggest day of the week, hands down. Friday, non-farm payrolls typically sets the tone for the entire month. I'd say that's still likely to hold true. But in terms of intraday movement, we are definitely going to see massive fireworks on Wednesday. Jobless claims right now probably not going to make a huge difference in the market. Apple puts, yeah, we'll see. AMD 100 calls. Yeah, I was looking at 100 calls this week also for AMD. These were pretty, I mean, of all the contracts, they were the most reasonable, but that's really far. Like, how reasonable is $100 call right now on Amazon or AMD? I don't know. And I am long Google at the moment still. All right, so I'm gonna, what's the time here? I'm gonna go ahead and skip the rest of diving into this. What I'd say is, if I scroll through here, when you're looking at these kind of things, the previous numbers aren't so important. I think for right now, we are currently at 5%. This is Wednesday for the Fed interest rate. The market is pricing in that we get a 25 basis point hike, which would bring us to 5.25%. That's 10 a.m. Pacific, 1 p.m. Eastern. And then 30 minutes after that, we get the conference. So there'll be a press release first. You'll get a crazy move, and then you'll have like a continuation that goes through the back half of the day and probably into half of the following day. The only thing I'd say is this time after the close, we have Apple. So let's say if that's a positive reaction, Apple itself Thursday afternoon could completely tear all of that out and reverse the whole thing. So I think whatever the move is, Wednesday PM likely follow through halfway through Thursday, so you could probably get a little swing, and then cut bait and run, because we have no idea what's going to happen Thursday. So Thursday after the close, we get Apple, we get Shopify, we get Square, and then Friday morning we get all important non-farm payrolls. So that's how many jobs are actually taken in the economy. I'm looking at some of my charts right here. Pfizer's still ripping to the upside. Guys, I called Pfizer. I bought it again. I sent it on the Twitter. I'm just saying, I think the bottom's in. I could be completely wrong, but I put my money where my mouth is right now. All right, Jesse, I'm
Sir.
gonna bring you up, man. Where are you at? If you want to do a quick screen share, looks like your
Oh, boy.
chart, your reception may be a little shoddy again. Can you hear me?
I can hear you. Yep.
Cool. Do you wanna jump on a SPY chart, or do you want me to? Real quick.
We can try me.
We can try you. All right. Ready?
Yep. Let me zoom in here.
You want to give us like a one chart? There
Yep.
it is.
Yep.
Cool. So where we are now, and then what are the key levels to hold for the trend to stay intact?
Yep.
Pivots and maybe some FOMC levels
Yeah.
to play off of.
Not sure. Just
if you go out that far.
So what's going on here? There we go. Yeah, so I did my levels yesterday, and I'll show Dixie as well because it'll correlate. So overall, the market grabbed this fair value gap liquidity, and now we're going for the buy side. So coming up on FOMC, we are a green day today. I'm pretty doubtful that we make any big moves, obviously, before funds rate and all that stuff happens. And then I see this fair value gap here. So I'm leaning more bullish. Obviously, we have a higher high, higher low, and grab liquidity. So I really like how that looks. Then if I quickly pull up the Dixie chart, we're the opposite, right? So we made a higher or a lower high, and now we're trying to go lower, which is what I want to see on. I want to see Dixie kind of inverse of ES, and so really levels. I want to see this fair value gap held. So right about yonder, 40, 61, 25. But I wouldn't mind if we came down here to, lowest I really want to see is 40, 23. If we have to grab more liquidity. Obviously, if I zoom out, go weekly, we're targeting this liquidity up here at 4,300, and we grabbed that liquidity last week, so we really should be looking bullish as a market. So price levels other than the retraces, targets would be here at the high. I would just pretty much grab highs from previous weeks, ultimately targeting about 130 points from where we are right now.
Where does that put you?
What's that? 43.27 is where I'd probably be ultimately looking at in the next coming weeks, as long as the funds rate isn't too bad. So about 44.30 on SPY.
Yeah, so that's exact. So this is what I love so much about this. Here, I'm gonna just flip this too. So this is mine on a 1 hour, right? So we're in this Death Valley kind of zone. I think it's so funny to see everything kind of line up exactly the same.
Right.
And I'll just zoom in here. So the technical break, if you guys were asking before, actually Jack was SPY breakout up, right? So yes. And so the level here for me, 413.67, right? And where does this come from? So this 413.67 is probably the same level on ES that Jesse's talking about, but that's actually, and I'll line this up really quick to a fundamental event. So this massive candle here, and I'm gonna make these, let's say, thicker, right? So here and here. So this high and this low, this is that February NFP print, 413.67 being the high. As long as we're above that, that puts us in an uptrend for the entire year. And so that's what happened. So this is Monday, Friday, Thursday. Thursday, we had a massive reversal. This blue line is off the anchored VWAP from all-time highs. So even if you were dollar cost averaging in at the all-time highs, you're green right now. But this kind of pierced down and then massive reversal up. What did we get on Wednesday? That was probably the biggest thing. Well, I think it was just earnings. So a lot of the earnings started kicking off right around then, the big ones at least. So we had Microsoft, Facebook. I mean, just way better than feared for sure. But an average an average week's range, since, by the way, we've been ranging very low, what I'd say is that because the ranges have been so tight recently, this week, I think we get an outsized move. I think this is the week for sure. And if we break that 417, yeah, I have up to 424 and possibly an extension above, which is exactly what you were looking at, right, Jesse?
Yep.
So I can't believe we're talking about this. Here's this fair value gap right here on SPY from this August high. I mean, you said 431. If today's low is the low of the week and we do nothing but go higher, just an average week's range would put us right up
Almost
to that
there.
425 give or take level, which this fair value gap, honestly, it really should fill. Just that's 427.43. So I think 427 and a half, we fill this fair value gap rather, and then see where we go from there. But yeah, the ranges have been so crazy tight, and once we extend out of this, we call like the Death Valley, right? Out of this nasty consolidation here, right? All of this consolidating right in this kind of level happen again here. Again here. This is that base, right? This entire base that we've been building. If we can extend out of this zone entirely, yeah, I easily see that 427. And then we start talking about fair value gaps all the way 430, 440.
Working our way up.
Which is so weird, right? Like so weird to be talking about after, there's so much bearish sentiment. But, at the end of the day, look, the charts are going up right now. That's what's true. So, what I'd say is if you're new to trading, this is where it comes into play, where it's like, we don't want to anticipate the move because, yeah, maybe you're bearish, right? Maybe I think that the market's going to go down, but it's early, right? It's way too early to place that actual bet. So be very, very cautious on that. Even with Apple, right? Like, look, Apple, I don't need to jump ahead of this. I'm not going to trade this from an earnings perspective. What I'd say is like, Jesse, do you remember that $3 trillion mark on Apple is like 183 or something like that, right? Like 183 right up in here. That's where Apple is a $3 trillion market cap company.
Yeah.
Let's say Apple's trending above this. Like that's, I mean, you can't really be bearish. We'll see. I mean, Apple dumped it last quarter, right? Like they had a huge miss over here. And just this intraday candle, look what happened. So yeah, it sold off after hours, but that very next day, it's like, oh, we're trending all the way back up. And it defended that, we would call this like, fundamental level right here, where it kind of all started to go down. Right here. That was the close. Held it. 147 was the floor on Apple, and we just extended to the upside. And this extension, man, I just feel like it was so fast. I blinked the other day and I was like, Apple's trading what? Like wild. Look at my Pfizer right now.
That's how I felt on Microsoft too.
Yeah. Like, look at this. He's going. So we're just filling this huge fair value gap right now. Oh my goodness. Google, by the way. So Amar asked me the other day, one of our traders, how come I trade Google over Google, right? Why do I trade the one with the L versus the one without the L? My answer to him was just option liquidity. But it made me think for a second. I remember, so Google without the L is the preferred shares. Google with the, I believe it's the preferred shares.
One of them gets more voting power, right?
So Google with the L is class A. So that would be the preferred shares. Yeah, preferred shares. All right. Right now, the preferred shares should be trading for a premium, but they're not. So I think this is still probably one of those arbitrage things where maybe this one will start to catch up a little bit more. That's just my gut. I believe, if I'm right, I believe that's class A, I believe is preferred shares. Okay, I have a couple charts. So stuff I'm going to look at right now is not reporting. And so Disney is one of the biggest ones I'm looking at. I think Disney's been held down with all this like political drama that's going on between Iger and like the governor of Florida. But check this out. This is like one of the slowest, cleanest chops to the upside, and just now starting to reverse, but you might not even notice it coming in. So they report on May 10th. So not this week, but next week. Disney doesn't, it's not a huge, Disney actually moves more on their investor relations days, but right. So we have a break of structure, higher high, right? Lower low over here now. Just recently we put in higher low and we're starting to break structure here now. I think this one because of where it is. Oh man, I got to change this, these lines. Because of where it is, this is the red line is a 200 day, orange is like 20 week. You see 50 day. Yeah, all of these moving averages, whenever they get real tight like this, and this is a massive like squeezy type setup. So technically coming into earnings, this is setting up for a squeeze to the upside for sure. And whenever Disney kind of like breaks out over this level here, it's a pretty quick shot, right? So quick shooter up and down in this range. So that price of that point of control is 99.35. If you're long equity, that's a pretty big deal to be holding above. If you get a shot to go long there, I would. I don't know that you would, that I'm going to. I think that's gone. I hope that's gone. But around this 200-day moving average, and if we get a green close on the day above that 102.50, to me, last week's close, and if you look at this on a weekly, this starts to look even more compelling. So if this weekly close is green up into here, like this could be a big shot to the upside. So 107 would be the upside. I was looking at like some 105 calls for this week, actually pretty cheap. If this does squeeze on the weekly, even into this lower time frames. See, this consolidation is pretty good. So maybe a little bit under the radar. We shall see. Is that XCal?
Oh, XCal.
Too funny. Just gonna see if I had a bunch of charts. I actually saved on my phone. And I was looking at all these charts like just last week. Stuff started to look like crazy bullish, and I was like, wow. I wouldn't have thought that we were looking this bullish. What is it? So casinos, LVS again. So big breakout continuing here. Earnings are, I don't believe we have earnings in the way. Earnings are past, right? This is earnings beat, raise, and now we're continuations to the upside. LVS 65 and up. That's the breakout level. But so your pairs trade, I think these are investable. Why I mentioned them. Win, same thing. Pressing this 116. This is going to be a big breakout. If and when. Looks like it's happening now. Couple closes above that. Yeah, 125 and higher. We have Caesars and we have MGM coming up this week too. So Caesar, yeah, classic reversal. MGM, classic breakout. All these are casino resorts. So this is in a subsector of discretionary. So it's not Amazon, is what I would say. Amazon rejecting this 200-day. This thing is dumping. I think Amazon's glory days are over right now. This is not something I want to be invested in at the moment. Decelerating, kind of topped out, has had all the good stuff priced in. I'll wait till there's nothing good priced into this to really go into that. But for now, I think Google's going to be the winner over Amazon all day long. Look at this daily on Google. Clean open above 106.59, which was that massive resistance. I think this Google trend after this breakout, this is your last call, investors. I hope it's the last call on Google, but this thing looks like ready to roll straight to like 120 plus in the next, let's say, month or so. Oh man, I'm looking at the rest. Pfizer's ripping. Google continuation live. Let's see. You guys have tickers. You guys with the China tickers. I can't. I believe it though, for sure. Let's see. Uh, keep staying bullish. Yeah, I will. I have no reason to be bearish, man.
Yeah. Market structure is bullish, not
Yeah,
just us.
Excel. There's no L dividends. Sure. Uh, if you want to be L, so I would say if you want to be bearish somewhere, here's one. LQD. I was looking at this. If you know what this is, corporate grade bonds. Yeah. So this is your credit crisis, right? HYG. I'm sure similar. Yeah. These are big ones. You could be bearish here if you want. But man, I cannot be a bear on SPY or the Qs. Zoom out a little bit. Look at this. Here's your point of control here. 411, 412.50. Yeah, we're holding over that. I got nothing, right? I gotta go with this. I gotta go with this straight through. You know, earnings being better than expected. Post Wednesday, we'll see, right? But for today, I can't. I can't. Is there something I'm not seeing? I mean, if it shoots straight through this liquidity, there's no sellers up here. But it did get there. We'll see. I'm bearish on a couple. Here's what I'll be bearish on. I'm bearish on Moderna, right? If we look at the weekly, again, this weekly chart looks like death. If you guys look at this, even I will say Pfizer weekly chart does not look good. But when you zoomed into the daily and you saw this 3 candle kind of setup here, reversal to the upside, $40 over, above 40, probably today. In shorter makes sense for me. And again, this is more investing versus necessarily trading. Let's see what else. AMD going higher day. Yeah, I think we were talking this, in the server. I was like, look, AMD intraday looking going to be reversal. It was the same thing the other day too. This was the 27th. We have this flush and we hit this right here. It was a higher low. And I saw this kind of order block. I'm like, this could be a full-blown reversal. And it ended up being, this is, I was talking to Duke the other day too, like, what am I trading a lot that I didn't used to trade? And I know, Jesse, you do this too, but looking for those fake out breaks to the upside or the downside. So fake downside break, reversing and getting these 3-bar days, outside days. I think we're seeing quite a lot of them.
I've found that if you draw like a horizontal line from previous resistance, if it doesn't close over or under that, depending on your direction, if it wicks and closes under or back inside the zone, that's like my A+ setup for catching
Reversal.
the reversal.
Yeah. Usually, so I remember I had a old mentor that would, we'd always have the question, as a newer trader, you always have the question, how long do you wait before you think that something is in the clear, if you will? And the staple answer was always like 3 15-minute bars, like fully above or below a level, right? So like if this is your current level right now, I don't have 3 15-minute bars fully above a level. So it's maybe not ready, but if I do get like 3 15-minute bars fully above 417, 14, yeah, he's going.
Yeah, even in that case, I would draw a horizontal line just straight from the highest body close, and then if we can close over that, I'd be probably pretty even that
Yeah.
4
I think for
candles
the
ago.
day, right? Like if you're talking intraday, like a 15-minute orb, you're
Right.
you're definitely, so this on a 15-minute orb, right? If this is the first 15-minute candle, I don't have 3 full bodies until 1, 2. This one is the third, fully above.
Right.
1, 2, 3. Yeah, above that 15-minute opening range, and that's technically where we took off. Here, you guys want to do some shorts. So here's a short I'm looking at. So calls to the downside. liquidity is a little funky. I'm not going to send it through a bot. But this store, if you guys have been into a Kohl's lately, I went to a Kohl's the other day. I'm like, oh my God, this is the worst. Like, it was just trashy. It was worse than TJ Maxx. And I'm like looking around, like the only people here are returning Amazon items and they're getting these 20% off coupons and nobody's taking them. They're just going directly in the trash. I think this one could go the way of Bed Bath and Beyond, unfortunately, as much as I, don't have a problem with Kohl's. I just, looking at the store, looking at the stock, this thing looks like it's in for a world of horror. Is that Ace? Look at this guy.
Oh, look
Love
at
you
that,
too,
man.
buddy. Love you too. All right. Last one. Unless Ace has one. So check Deer, right? So Motion's asking for Deer. So Deer, cyclical, right? If you want, oh my God, look at my Pfizer, look at like Google, everything's like ripping to the upside. This Motion, Deer, is caught in a chop zone on the weekly. I don't have a trigger quite yet. I believe they already reported. I'm below most of the critical points. Are you looking short or long? Oh, is Ace on Twitch? Am I on Twitch? Yes. Yes. Ace. Of course, dude. Go into the analyst chat in the server, click that link, and you'll pop up here. Anyways, yeah, Deer right now looks like it just ran into a little bit of overhead resistance. This would be a classic short, really. How's the liquidity on this Motion? Let me see. I'm just gonna pull up the chain. 2,400 calls to 2,900 puts. It's gonna be toughy. I see some volume above 386. Yeah, above 386. Long, short. So if this goes up, right? So this red line is that 200-day moving average. If this starts to go up, you should, 386 that's good. You should go straight into that 200-day and potentially fill this 395. Cat is a short. Yeah, Cat and Deer.
Is Deer's option chain pretty liquid?
No, that's what I'm looking at.
I didn't think so.
Yeah, so I mean, I can't trade this. You might be able to. I'm looking at like somebody got a bunch of the 360 puts from May, 50 of them at $4 a piece. That makes sense. Just targeting this double bottom, but this double bottom would likely not trigger. You want to see a nasty short that I'm in that has zero liquidity? I've never seen a chart that's this bearish. Literally every day this thing goes down. Cal-Maine Foods, I'm short. I was looking at some flow, like there's a bunch of puts on here. Nobody's selling anything. They're just holding. This was like these guys do like eggs. They produce eggs. It's the funniest short ever. But look at these volume shelves. It's absolutely wild. Although 54, they don't really start showing up till 40, sub $40 is the next, like this massive valley. It's just getting sucked through every day, a little bit. But yeah, eggflation is over. They were up because of bird flu, I guess. Anyways, yeah, we'll look at Cat too, because so Cat would be your pairs trade to Deer. Yeah, this looks like a short too. This is nothing but a bunch of lower highs. Cat actually might be a better flush because if it does break through this 200-day, yeah, this is low, lower high, lower low, lower highs. Cat's a short. He's right. Cat's a short. If Cat's a short, Deer is likely a short. All right, Ace, it's official. If you we'll do multi streams. Can I just say right now, if you did not see that daily chart on Google, completely above 106.50, I don't know what to tell you. This thing is going up. It's ready to roll. Again, everything's squeezy here. Cat short, yeah. Google's up. We'll see. Oh man, and my Pfizer calls are going up. Out of control. You have that trigger long Nvidia too. So Nvidia triggered long Friday. This is today's candle. So it was above that 275.89. We have an extension here now. Look at this chart. I mean, the hell? It's just going up, right? Right now, at least. Yeah, there's nothing bearish here. Consolidation, break to the upside. I mean, geez, really? 300 inbound quickly. That's wild. All right, Jesse, you got anything you're watching this week? Mostly trading futures, or you got any equities?
No, futures and forex. Then I'll just trade the options off the ETFs.
Yeah,
starting to towards the back half of the week, I'll start to pick up more equities, but I really just hate holding and waiting for 10 to 20% most mornings. Early in the week is torturous.
Here, I'll give a couple more. So I'm just looking at my stuff. So Micron on watch. It's not here yet, but Micron, if and when it breaks this level, apologies for all these lines. But here's Micron's like point of control 60 right now for this consolidation. It's really 58, but say if it's holding above 61, earnings are not until next month. So for now, it's still probably chopping. If this thing starts to break above 64, 66, you guys can definitely take this to the upside. This is a massive consolidation here that it spent a ton of time in. It broke down right where it is. So if it gets a daily close above that 64.60 level, my gut is that it would actually probably shoot through this, at least right to the top at like $70. So that could be a nice little play to the upside, but it's a huge consolidation that it's coming into right now. Airbnb had earnings coming up. Check this chart right off the 200-day again. 275 is what I was going for before. These guys report earnings, not this week, but next week. Keep this on watch just for a little pre-earnings run up. I had a trade on previously, and I said that 115, I think, was going to be that next price of interest. It flushed down a little bit more, tagged this 200-day right here. I'm seeing this setup all the time, right off the 200-day and right back up. SLB is one that I have active. Same thing, right off the 200-day, heading back up. Where else are we? I think Intel was in a funky spot. Yeah, Intel broke above. Now it's coming back to retest this 200-day. So I'd watch this one. And Uber is a big one, a big trader. Oh, what? These are massive 2 days on Uber. I did not realize. Friday and today. What the follow through? Okay, well, that trade's over. Let me see.
Crazy.
Yeah. I think, I'm looking around. So Coinbase was coming down. Coinbase was dumping heavily, but it's right into this zone. So this is that prior kind of like consolidation. I think I wouldn't be short anymore here. Maybe let it consolidate. Earnings on the 4th. I got to leave this one alone. But $40. I mean, Coinbase under 40. I personally don't think it's going out of business. Just me.
You do or you do not think?
I don't. I do not. Well, the breakouts. Merck is a breakout chart. Slow breakout chart, but that's a breakout chart. You guys seen these staples? Yeah, yes. All-time high. Again, Procter following suit. Breakout chart. Pepsi and Coke. The most boring stocks right now, breaking out of control. AZO was another one. Funky retail, right? Like Gold, Tesla. Oh, let's do Tesla real quick. So Tesla I'm torn on. I would say I haven't traded Tesla today for one very clear, like specific reason. I think that Tesla goes into a 2-week holding pattern again. So I'd probably be looking at condors. Here's the thing. So Tesla did make a new low. So low, low. Here's the high, right? So this last break of structure, here was the low, broke down, but it got back up above and it broke structure to the upside. So at this point, the second that it didn't make a new low, which was yesterday, and it didn't break this high, Friday. So Thursday, it didn't continue down. Friday, though, it didn't continue up. Unless Tesla's above 167, I don't think it goes up. And unless it's below 152, I don't think it goes down. So for now, I think Tesla is going to be stuck in this kind of, wrong tool, $10 range right in here from 165 to 166 to 150, call it. But what I wanted to do was show you when Tesla does this, and it does it pretty regularly, it gets stuck into a consolidation for sometimes a full month. So this is 26-day consolidation here. This is a 12 days. Let's call this consolidation. 12 days. So 2 weeks at minimum. It's a really tight range, which would put this just beginning, same thing, right? So I think that we can extend it one more time, another 2 weeks, and she goes sideways for now. So maybe some condors, but I don't think you get a buy. This is 30 days. I don't think you get a buy just yet. It's got a breather. I'm not going to trade it unless it's. I'm probably not going to trade it unless it's breaking one of these ranges. Motion wants CLE, CRM. Yeah, so CRM was a run up into, right? This is 200 week. CRM is a big earnings mover, but outside of earnings, it really doesn't move that much. Yeah, huge earnings mover usually. No, it's stuck on this 200 week, maybe up to 210 in between now and then. $202. Yeah, this is a psychological level and the technical level. 200. If I get like a full day open and close above 200, and then a little pullback with a retest, and hold for like an hour over 200, I'll take it. But I want to see that. I'll just set my alarm. It's a good watch. See how Colgate. Thoughts on Marvell? So the semi sector, man. You know what? I haven't been staying up with the semis as a whole. What I'd say right now, good old SOX L, right? So SMH to the upside. This is the sector. I think this is a similar setup. If it breaks out, right now it's definitely going up. It's definitely going up. At least to put in at a minimum a lower high. So for the next few days, I think you could trade the upside. This is SOXL. Yeah, I think that's clean. And then really kind of reevaluate from there. I think we have a lot of semis on deck. So AMD first and foremost. Oh my God, look at this Pfizer high day, high day, high day. Google high day, high day. We're going.
What spooks me is that Dixie's also moving up.
Dixie is also moving.
Like in the same direction. So it's like that. I kind of stopped trading after my 4 trades this morning because I'm like, these should not be in correlation. Same thing with it's opposite on Forex, but generally Dixie's opposite of what markets are.
Yeah. So I think it's the FOMC coming, right? So what's going to happen with the rates, yields?
Right.
I'd say like gold is getting interesting. It's not. It looked like it was going to break this morning, but it couldn't hold. This is kind of like that downtrend broken. now consolidating. I think this is going to move after FOMC. Post FOMC, so after Wednesday, gold needs to be on watch. It's going to be a big trade, likely continuation, but not before then. I don't think so. And to your point, yeah, Dixie kind of pushing to the upside, but relatively speaking, it's not. It's just a little bit of a bounce again. Unless we can get a full open close a couple times day over 102 and a quarter, it's not quite there, but it's possible. And I think that brings us to Wednesday's FOMC. The one index I keep looking at, IWM, again, still constructive. I think 10 right here. So 170, I'm going to move this line up. So we had this April NFP low. I'll call it 174. If we can hold 174, call it 174.70. I mean, this thing looks like it could have an average week's move. This is probably be the biggest move. I keep saying that, and it hasn't been going right. So we'll have to see. But yeah, this one still has all the upside potential. I just, unfortunately, it's got a ton of carry exposure. It's just funny, like looking across the market. We got Amazon dumping, right? It just like gross. Amazon dumping. Every time I turn around, it's like new low. But then we got Nvidia, right? My GE this morning, right? Pfizer. You got downside, right? Netflix was just ugly. Did you see Netflix candle this morning? It was gross. I was like 330, and then it was like 3 sub 320. I'm like, holy crap. Interesting recovery, but we'll see. I just think, a lot of rotation all over the place. Microsoft holding is good. TLT is a good one. So I do want to talk about TLT. Big sell off this morning. This is, again, looking into the rates situation. I think, he's saying back to 103. If you get a buy on TLT around 103 and you own, you have a large portfolio, just if you own a large portfolio, and you could put some money aside and just let it sit there and pay you a monthly dividend, this is not a bad spot to be, right? Especially if you could snipe something like a, 102, type entry, sell some $100 put, something like that. We are closer to the end of the rate hikes than we are anything else. So even though this chart looks gross, I don't think it goes much more than that. Nobody's pricing that in. Last check here. Here's the actual Fed watch. So we want to look at January, compare. So January 31st gives us the end of year rate kind of target sitting at. So we're sitting at 5 right now. 425, 450 is what they're forecasting by the end of the year. So that means hike, which is, here's the hike priced in. 88% that we stay or do a quarter point hike. Nothing other than that. Again, 60% for June, July. And it's not until September that this 5.25 rate becomes a 13% probability or lower. So we're looking November, they start pricing in hikes. September, potentially September, November, definitely by December, and definitely January. That's what the market's pricing in. So maybe one more hike, maybe not. I don't think the market really cares at this point. It's just going to be, I think it's going to be a commentary. He's got dovish commentary. Let's say he does a hike and, is bullish on the economy still. I think that's what the market's really going to be listening to. Side note, Pfizer, high day. I'm going to end it on that. All right, guys. Cool. Appreciate you, Jesse. Appreciate all you guys hopping in and tuning in. Thanks, Ace, if you're still around, sharing the love. Appreciate you. And, to everybody else, adios. I love those legs. I got Jesse's legs in the camera.
Did me dirty right there.
Yeah, man. All right, guys. See you on the next one. Later.